Hi, welcome to the Market Alert for Wednesday the 12th of April 2017. So yesterday, interesting day, a lot of weakness in the market in the first part of the session, but as ever they brought the market back. Obviously didn't listen to the email I sent out where I thought the weakness may have continued, but I'll show you why it didn't in just a moment, and the market recovered. But then there's no surprise the Fed bringing the market back either, to be perfectly honest with you, because that's what they've done since 2009, which I've spoken about every morning for the last couple of weeks. So yesterday the market traded sideways, put in a sell signal, and then this was filled. The market moved lower, and then eventually we got to the scalp, drove through the scalp down to the psychological level that you can see here, which is going to be the 20,050 level. I'll just put the trade markup back on the screen. You'll see me do that in just a second. I'm just going to fast forward here. Oops, you have to unlock the screen first, so I'm going to be miles ahead now. So let me just go back a bit there, put it back on the screen. So there we've got a potential 50 points down to this level, but given the weakness in the market, I was hoping prices would actually move lower, and you'll see prices starting to find support. I've removed the initial stop, still got the scalp in place in case the market comes back, and there you see prices going through the 20,550 level, moving through. And at this point what I'm doing is having a look at the daily chart. I want to see where the bottom of the channel is in the daily chart, and you can see there we've got 20,527. So we've gone through the 20,550, and the 27 level is where we're looking at. So I've removed the fibs from the top. We've got this defined channel which I've spoken about again in the bigger picture. We can see that the market came out of it once and then came back in, came out the bottom of it and went back in. So if we can break either side of this, it's going to be a decent move. And years and years and years ago, way back in the 1990s, there was a trader who specialized in the sort of channels. He called them narrow sideways channels, and what you could do is you could actually measure the length of this and project it the same length up or down where the market would go when it broke out of it. But we'll worry about that when it breaks out. But it was very interesting and quite a common theme for trading sideways markets there. So we've got the market coming down to this figure. That's what we were looking at. Slightly sidetracked there. So I was looking to see where the market had gone down to, and then you'll see me come back and have another look. Memory failing at this point. It's 527, but for the life of me I couldn't retain that. And there you see 508, 519. So we've come through the 27 area, and the market's starting to find some support. There's a slight increase in the volume there as well, which again is indicating that the market could move to the upside. There's also one other clue. You'll see this bar here, the market's come off the lows as well with the increased volume. So there's obviously some buying around at this level. So at the moment we're sitting on 65 points, but just in case the market's going to sell off, and it's going to kick off with Korea and Russia, which would be negative to the market initially, leave things in place, but then you'll see we're placing the stop. I'll just wind that back a bit so you can see the stop being the trailing stop 50% above. 1 second, anytime now. It's always difficult when you've got 8 hours of video to actually try and find the right spot just to draw these things in. So there we go, we've got this 2 levels, and then you'll see me, there you go, drawing in the stop, and then the market comes up and takes out this trade, which you'll see if I now move the scrub line as they call it, and there you go, you see the market being taking out the stop there. So that was the only trade I was involved in yesterday, because as you know, Tuesdays I don't sit at the desk in an evening, spend some time with my wife. We go off ballroom dancing, or attempt to, and I didn't bother with the rest. So let's have a look and see how the rest panned out. So we had another potential sell signal here. If I recall, that was around a 32-point potential loss there, but you've already made 45 or 60, 70 points in this, and you've decided to get out. You don't want to try and get short again. There's no point, because unless there's something geopolitically moving the market, we know that they're going to bring it back up, and that's precisely what they did. They attempted short there, didn't work, but then there was some profit taking from the longs before the close there. Daily chart, well, we're still stuck in this sideways range. You can see that defined range that we've just looked at. It's exactly the same as you'd expect. The market at the moment is sideways inside the low and high of yesterday's bar. So we've got a nice bit of volatility inside of the sideways range, and we'll see this increase should the market break out. News-wise today, well, it's Wednesday, so it's crude oil inventories today. We've got those at 3:30, and that's the only news we've got on the table within the Dow trading time. Unemployment figures for the UK. Of any interest, average earnings. Carney's speaking at 9 AM as well, so that might add to the pre-market session. Let's just have a quick look. It should be fairly sideways for this session, and it is. It's very sideways at the moment. And then finally, the implied volatility. And on this one, we've got an increase for yesterday, because obviously the market moved lower, 1131 up from 1083. Interesting again, because of this sideways move we've got, the volatility is increasing, and that's because of the North Korean, Russian, everywhere else in the world that the US wants to have a fight with at the moment is obviously dominating the potential risk in the market to the downside, because if they do any further strikes, especially if against Korea, then of course you will see the volatility spike massively, because there is a massive risk to the downside on the stock market. So it looks like there's sort of marking up in advance going on here at the moment. Right, that's it. I will speak to you later today. Again, Wednesday, only the crude oil inventories first hour, see how things pan out. We've moved to the downside, bring it back unless it breaks out through that 20,527 low. Other than that, expect the market to be brought back if there's any downside move to start with, because that's been the pattern for some time. Eventually the market does break out, probably to the downside, unless something out of the blue comes out, Yellen decides to reduce rates, or you just never know with these morons anymore what they're going to do. So expect the unexpected, as they say. Right, that's it. I will see you in tomorrow's market alert. Speak to you throughout the day. As ever, thanks for watching. See you in the next one.